Hello guys, in this video we will be doing a quick revision on the topic of issue of debentures. Now in the classes that we have taken for the issue of debentures, I have already discussed and I have already told you all that issue of debentures is almost identical. The transactions that take place and the transactions that we are supposed to record during the issue of debentures are almost identical to the issue of shares. But although the transactions are of similar nature and are almost identical, there is certain differences that is there between debentures and shares. So first of all, let's understand what is a debenture. So debenture is basically a long-term loan that is taken by the company to meet its financial requirements or to meet up its capital requirements. See, what happens is company or any business to run itself, it requires capital. Now capital, we have already learned that capital can be raised firstly from issue of equity shares on other types of shares that is there. Now if that itself, the capital that was raised through the equity shares, if that is not enough, then the company has to resort to some other sources, and debentures is one of such resources. So basically debenture is a long term loan. Now again, long term loan also, see what happens is the capital requirements of the business. Let's say if it is 50 crore rupees. Now 50 crore rupees is a huge amount. Now this amount you may not be able to collect everything from a bank. So what company can do is the company can basically divide this 50 crores into small fractions, let's say 1000 rupees unit. So this 1000 rupees unit, basically what has happened is this 50 crore rupees has been divided into smaller fractions of 50 smaller fractions of 1000 rupees. So in this way company can issue debentures, okay, which is basically a long term loan and which can be used to meet up its capital requirements. Now for investors, since this is a loan, okay, now investors are deemed to receive interest on it. So what is the benefit of buying debentures when you could have bought equity shares? Now in equity shares, what happens when you are an owner of an equity share, you receive dividends. Now dividends, like I have discussed earlier, it is a share of profit. Now if the company does not make profit, that means this dividend that we are talking about, this will not be received by the equity shareholder. But if you have bought a debenture, on debentures you will be receiving a certain rate of interest. Now this interest that is receivable on debentures will be received regardless the company has made any profit or not. So even if losses have incurred in the transactions, okay, over a financial period, the interest that the debenture holders are supposed to be getting, they will be receiving it. So for investors, what happens is, like I have told you all, investors basically see want to earn profits or maybe earn dividends or whatever interest that is available in the market. Now whenever you make an investment, there's always a factor of risk. Now when you buy equity shares, the risk is very high because the probability is that you may not be receiving any dividends in the future. But whereas if you have invested in a debenture, that means that in the debenture you will be receiving interest. You are deemed to, you or let's say you are bound to receive this interest regardless of the profits or the losses made by the company. So what happens, the risk that is there is low. So this is one of the reasons why debentures are basically purchased or issued by the investors, or let's say why investors are attracted towards debentures. All right, then now let's talk about the benefits to the company. The benefits to the company, see, company also has certain benefits that it is going to get from the issue of debentures. Firstly, it is a source of raising capital. Large capital requirements of the company can be met up by using issue of debentures. Secondly, what happens is one of the major importance is that the interest that is payable on debentures, or which is payable to debenture holders, is deductible under tax considerations. That means, supposingly, let's say the annual income of a company is, let's say, rupees 5 lakhs, and let's say this same company has issued 10% debentures of rupees 1 lakh. This means every year they will have to pay an interest of amount which will be 10% of 1 lakh, that is rupees 10,000. So every year 10,000 rupees needs to be paid as interest to the debenture holders. Now what will happen is this interest which is paid by the company to the debenture holders will be deducted from the annual income. So the taxable income, will be now 5 lakhs minus the 10,000 rupees, which will be totaling to 4,90,000 rupees. This means that the company will now only have to pay income tax on an amount of rupees 4,90,000 rupees. Now what happens is, see, even the dividends on equity shares is paid out of this annual income, but whatever is the dividend that you have paid out, that will not be taken under consideration. Supposingly, let's say you have paid a dividend of 20,000 rupees out of this annual income, but when you will be calculating the taxes, that time this 20,000 will not be deducted from the total income. But whereas if you see, the interest which was payable to the debenture holders is being deducted from the uh, total annual income, or the total taxable income of the company. So this is one of the benefits, or one of the major benefits to the company as to why they issue debentures. Now there are different types of debentures which we have already discussed. Okay, redeemable debentures, irredeemable, secured, unsecured, convertible, non-convertible, for which I have already sent you all the notes. Okay, and I think if you see that, if you just have a read through, you should be able to understand it. Now coming to the main issue, or the main topic, that is the recording of debenture issues, the transactions. So the transactions that take place, see, what we need to do is, we will be, as accounting as a student of accounts, we are supposed to record all these transactions that take place during the issue of debentures. Now issue of debentures, okay, like for the shares, can happen in three different instances. That is, firstly, it may be issued at par. That means a debenture which is worth 10 rupees will also be sold at 10 rupees. Okay. Then secondly, we have another situation which is at a premium. Now premium basically means something is being sold at a value higher than its face value. Let's say, supposing the face value of the debenture is 100 rupees, but it is being sold in the market at a value of rupees 110 rupees. So something is worth rupees 100, but you are having to pay an extra amount of 10 rupees for that. That is known as your premium. And thirdly, we have a situation of discount. So discount simply means something is valued at let's say 100 rupees, you are purchasing it at 90 rupees. So this is a case of your discount. Now, like I said, the transactions that will happen in your journals are almost identical. So whenever you issue identical to the issue of shares that I have told you on, so like for the issue of shares, okay, in the same way these transactions will also be recorded for your debentures. So when shares were issued, okay, first thing is that you receive application money. In the same way, for debentures also, you will be receiving application money. So let's say, okay, we take this case. Okay, let's see the transactions for the issue of debentures at par. So at par, first transaction that will happen is you will be receiving money for your applications. So bank account will get debited, and this money that you have received is for your debenture application account will be credited. So since you're receiving money for applications, your application money will be credited. Now, if there is a case of excess application, then we will have to return that, which means this entry we will have to reverse it. So what will happen if there is any excess application? So debenture application will get debited and your bank account will get credited. Okay, so this is what will happen during the application if there is excess application. Now thirdly, after you have received application, that means after that you will have to make allotment. So when that allotment process takes place, okay, what will be the entry? Since you have received whatever money has been received is right now kept under this debenture application account. Now all of these needs to be transferred to your debenture account. Like for how for shares we used to do, after receiving of application money, the account was to be closed and everything was to be transferred to your equity share capital account. So in the same way here also what we will do is we will close this application account. So to close this application, what will happen? Debenture application account will get debited, and whatever we have that will go to our debenture account. All right, so this is how you will be recording the transactions. Now for the case of premium, the first entry will be same, okay, that is a bank account debited to debenture application, because you will be receiving applications here also. So what will happen? Bank will get debited and debenture application account will get credited. Now what will be the value? Like for this case, 100 rupees was the actual value, but it is being sold at 110. So 110 rupees will be received during application. So out here we are talking about a case where all of the money, entire value of the debenture is being collected at once. Like I told you all before also, as we have discussed for equity shares, that the value of the equity shares may be collected at once or may be collected in installments. So in the same way for debentures also, the cases may happen that entire of the amount is collected at once during applications itself, or it may be collected in different installments. So the different installments that I'm talking about is your application, allotment and calls as per the decision of the board. So supposingly, if we are collecting the money during applications, that would mean bank account would get debited, debenture application account would get credited. Now second thing is, if there's any excess application, again like for wise what we did at par, in the same way you will have to return any excess applications received. Then comes the point of allotment. So when this allotment is started, that means this application money that has been received needs to be transferred to your debenture account. So what will happen? So debenture application account will be debited with rupees 110. Now this money is to be transferred or to be credited to debenture account, and the actual value of the debenture is 100, which we will be showing it as 100. And there will also be a premium account which is known as a debenture premium account of 10 rupees. So on the credit side, if there is any premium being collected, the premium will appear on your credit side, just like for the shares how we used to record the securities premium. And if it is a case of discount, receiving of applications will be the same. Only during the transferring of this application money to your debentures account, that time what will happen, a new entry will appear, a new account will appear on the debit side. That will be debenture application, like we are transferring money from application to your this debenture account. So debenture application account will be debited. Along with that, discount on issue of debentures account will also be debited, and this entire amount will be transferred to your debentures account. So this is the only difference that will appear if there is a case of discount during the issue of debentures. So let's see some examples where this problem can be explained. So let's say there is a company, S Limited is there, okay, and this S Limited has issued let's say 10,000 12% debentures of, let's say, rupees 100 each, and it is payable at par. Okay, it is being issued at par and is payable in full on application. This means that whenever this amount of 100 rupees, entire amount is to be collected during the application. And let's say applications received was for 11,000 debentures. Okay, so in this question, actually what has happened, company is issuing 10,000 debentures, okay, and the value of the debentures is 100 rupees. And what has happened, everything is payable during the applications itself. That means the entire amount of the debenture is being collected at once. And what has happened with this is that the applications that was received was for 11,000 debentures. So let's see how we are going to record this transaction. So in the books of S Limited, what will happen in the books of S Limited, the journal that we will be passing, first journal will be for receiving of applications. So what will happen, bank account will be debited to debenture application. Now how many applications we are receiving? We are receiving applications on 11,000 and it is for a value of 100 rupees. So the amount will be 11,000, and so 11 lakh rupees will be received during the applications. Now since excess applications was received, that means we have to refund that money. So to refund that, whatever transactions we have passed in this first entry, we need to reverse that. So what will happen, debenture application account will be debited and your bank account will be credited. What will be the value? Since 1,000 was the excess application into 100 rupees, that will be an amount of 1 lakh rupees has to be refunded to the debenture application. Now After this, what will happen is we need to transfer this application money that we have received towards our debenture account. So one thing I forgot to tell you all, see, the debenture has a name, 12% debenture. So this will be 12% on the whenever you record or you open accounts, you have to name it also 12% debenture application account. Similarly, here also 12% debenture application account. And similarly, in the transferring of money to the debenture account also, that time what will happen, 12% debenture application account will be debited, and this 12% debenture account will be credited with a value of 10 lakh rupees. Is this clear? So this is how you will be recording if the transactions is happening at par. Now same way, let's say the company had issued these debentures at a premium of, let's say instead of par, let's say at the same question, I'll just make some changes. Let's say S Limited issued 10,000 debentures of 12%, 10,000 12% debentures of rupees 100 each at a let's say a premium of 10%, okay, payable full in applications. And let's say this scenario of excess application supposedly was not there. Now what would have happened? The entries would have remained the same, okay, receiving of applications, that would have remained the same. Now the values of course would change, because out here we are receiving applications for only 10,000, but this value of 100 rupees, now how much will that be? Since the actual value, okay, the face value of the debenture is 100 rupees and it is being sold at a premium of 10%, that means we have to add this 10%. So when you calculate that 10% of 100, now this means 10 rupees is the value. So the market value for which this debenture is being sold is now 110 rupees. So what will happen? You will be receiving applications at a of 110 rupees. So what will happen to the amount? Again, it will be 11 lakh rupees. Yes, so 11 lakh rupees will be collected as debenture application. So after that, what will happen? Since this refund excess applications has not taken place, no need to make refunds for any of these. So you can erase this entry. Okay, let's erase this since this situation has not arisen where we have to refund anything. But changes will come during the transferring of your money from the application account to your debenture account. So out here what will happen is, since the amounts are also different, let me just erase this. Okay, so now what will happen is, for debenture applications we have received 11 lakh rupees. Now debenture account, we can only transfer the value as per the face value, that is 10 lakh rupees. Now the excess 1 lakh rupees that was received, that is to be recorded on the credit side as 12% debenture premium account. So this is how we are going to record this premium. And one thing that we need to keep in mind is this excess premium that we receive. Okay, now since this premium, okay, is there, have you ever seen any item in the balance sheet of a company known as debenture premiums? Yes. So what happens? This debenture premium account does not appear on your balance sheet, since this is a form, this debenture that we are talking about is a form of capital, is a source of capital, right? So whatever premium is recorded in this debentures premium account, that needs to be transferred to your capital reserve, because this 1 lakh rupees is excess amount that we have collected during the raising of capital. So this premium needs to be transferred at towards your capital reserve. So one more journal you'll have to pass, that is 12% debenture premium account will be debited with a value of 1 lakh rupees. Now this 1 lakh rupees will go where? It will go to your capital reserve account. Is this clear? So whatever excess money that we are collecting during the issue of debentures, that needs to be reflected in the balance sheet under the head of capital reserve. So that is why we will be transferring it to as capital reserve. Now one more case is there, okay, one more example, which is for your discount. So let's say Z Limited has issued 15,000 10% debentures of rupees, let's say 100 again, okay, each and this is issued at a discount. Now discount of, let's say, 10%, okay, and everything is payable during applications. So during application, what will happen? Again, entries will remain same. Bank account debited to 10% debentures application. Now the amount that we will be collecting, since 100 rupees is the actual value, minus 10% would be of 100 rupees would be 10, so 90 rupees. So 90 rupees would have been the market value. So 90 rupees into 15,000, whatever values you will be getting, that you will be recording there. All right, and since no excess applications has occurred, so what will happen directly? Now what we can do, we can transfer this applications money that we have received to our debenture account. So what will happen? 10% debenture application account will be debited. Then along with this, what will happen? Your discount on issue of debenture account will also be debited, okay, with the value, like if this is 100 rupees, if this is the value of debenture application that we have received, 90 rupees was received. So what will happen? 90 remaining 10 rupees will be transferred to your discount on issue of debentures account, and on the debit side, what will happen? To debentures account, okay, 10% debentures account, a value of 100 rupees needs to be reflected there. Then after that, what will happen with this discount on issue of debentures? So whatever discount, it is basically a form of loss, right? So whenever any losses has been incurred, it is either charged against your profit and loss account or any other surpluses that we have. So normally you must have seen, when we are issuing shares, any excess that we have, that is normally when we collect capital, what happens? Securities premium is there, so it may either be discharged against securities premium, and if the discharge of if securities premium is not there, then profit and loss account will be utilized to see of this losses. And what will happen on the credit side? To discount on issue of 10% debentures will go there. Okay, so this 10 rupees losses that we have incurred per debenture, that is to be set off against the securities premium or your profit and loss account. So this is how you will be recording the issue of transactions of shares. So this is in a case where we have collected the entire amount in full, that is entire of the amount is collected during the application. Now supposingly, what might happen is the collection of amounts may happen in installments. Now if installments is there, I don't think it requires explanations, because we have already seen it for the issue of shares. So what happens if, let's say, if 100 rupees is the debenture, okay, and let's say in application they are collecting, let's say, 40 rupees. Then let's say in allotment process they are collecting 30 rupees, and on call they are collecting 30 rupees. So I think this you already know for shares how you used to do it. So what will happen? Only the names will change. Debenture application, debenture allotment, and debenture call. So once the amounts become due, after that you will be receiving the money. When money is received, bank account debit so and so. Okay, and accordingly you will have to record the transactions. Is this clear? So this is how the issue of debentures are to be recorded.